Good afternoon. I believe we are live here. This is Brian Shannon from alphatrends.net, and today is Wednesday, January 12th, 2011, and I'd like you to repeat this after me. The market is in an uptrend. The market is in an uptrend. It's innocent till proven guilty, and if you try to pick a top in this thing, you're going to get exactly what you deserve, which is to get run over here. There's just no evidence of any meaningful selling beyond a 1 minute time frame. Today we had a classic gap up, and the market gapped right up to the daily R2 level. It pulled back here a little bit and then got above that volume weighted average price and squeezed the shorts from there. So it was just a classic gap up and run beyond the VWAP. So again, we're in an uptrend. The market looks like it's gunning for these other higher levels from back in let me just get my trend line there. It looks like it's gunning for probably 130 or so from back here in 2008. But picking a top is it's a real tough game. I don't know anyone who's been able to successfully do it, and with any sort of consistency. But as long as we remain above these moving averages and we break past levels of resistance, again, it's innocent until proven guilty. So far this year, we've seen the market in a pretty tight range. We came down and tested the lower end of that range a couple of occasions, and let's take a look at the volume weighted average price as well since the beginning of the year. We'll take a look at the 10-minute time frame here. We can see that volume weighted average price near close to 127.15 ish or so. It's kind of rallying now, rising higher, that is, but that 127 has kind of been the midpoint of that range. Today obviously we gapped higher, and it continues to be something that just torments the short sellers here. There's a lot of reasons to look at this market and want to believe that that it's just up too much or whatever, but until prices actually turn lower, I get people emailing me every day, and I read 2 or 3 sentences, and then I end up just not being interested, because every time I like to see a good story as well as anyone else does, and I like to see ideally confirmation from the economy and all that sort of thing, and I like to write about some of these stocks when I see something that has the potential to set up as well. A week ago, I had this past weekend, it came out on Monday. I wrote about this VTG, which is Vantage Drilling. And Vantage Drilling, if you look at this weekly time frame, it's a great looking weekly chart. It had broken some resistance back in December on some heavy volume, and it had pulled back and was kind of holding in there. Well, on the daily time frame, last week we had traded it. That is, the people who are subscribers to alphatrends.net, we had traded it above this level. It was a nice move. It made it to a new high, but we got stopped out of the stock. And then I was looking at it this weekend, saying that if it can get back above 226, that you have to look at it and say, why is this one particular insider, an Asian businessman, I forget who he is, but he owns 93 million shares of the stock. Last year, that is in 2010, he bought 10 million of those shares. So he bought 10 million shares last year, or 17 million shares rather, more than 1 million shares a month. So that shows some conviction. Makes you think, what is it that this guy sees in the stock? Well, if the stock got above 226, we wanted to buy it. But right now, good story, nice looking website, interesting assets you guys have there, but only price pays, and you might look at this and say, well, that's just a little stock, that doesn't matter. But you can say the same thing about a stock like PWER that back on this day reported big earnings and big short position and big revenue growth, and it just got crushed, and the shorts continue to pound on this stock. The point is that like I always say, it's only price that pays. We've seen some real good stocks, obviously, recently. I've been talking about this RAS above $2.30 a week and a half ago. Some subscribers, I've sold out, but some subscribers are still long this stock, up close to 30% or so right now. So there's obviously a lot of opportunities out there, and you look at RAS. When it broke past that $2.30 level, it's been just a real nice pattern. So it's not just about low price stocks or high price stocks. We had MOLX on Monday as well. So the point is, the market's in an uptrend. We want to give the benefit of the doubt to the buyers, but if the price action isn't confirming what we're seeing in the overall market and the bullish environment that we're in, then you want to move to the sidelines in that stock. The Nasdaq is up at highs. These are highs not seen since 2001. So the market has a lot of momentum in it, and this momentum typically doesn't fade very easily. Perhaps the Nasdaq, the Qs that is, are headed up towards about $58 a share, and that seemed like a faraway target just maybe even a couple weeks ago when we were down at 53. But right now it's within reasonable distance that it seems as though it could come. But we've got of course to maintain our emphasis on risk management. We have these higher highs and higher lows on the shorter term time frame above a rising 5-day moving average, so you simply cannot short it for anything more than what I would consider to be a day trade scalp. The Russell 2000 has kind of been the more worrisome group, but it really has been, like I've been saying, it's been more neutral. A lot of people have been trying to short the Russell because of this one big day right here, but it hasn't closed below that the 20-day moving average since back in November of last year, and it had pretty much turned sideways, although in a choppy fashion. When you look at that, let's look at a 65-minute time frame. It had pretty much been sideways in here, and let's just kind of change that scaling. Between and you could say maybe we're just at the top end of that range, but it's bullish overall. We've got look at the advanced decline line today: 2,150 advancers, 881 decliners. It's just difficult to make money on the short side when you have that kind of strength, and we have the semiconductors breaking out to new highs as well. This market had been, it had broken the trend line, as we knew, and I was saying that corrections occur through time and price. And breaking of a trend line only means that the rate of ascent has slowed. It never broke that 3210, 3215 support, and really held in there very resiliently. Now when we look at the weekly time frame and where we are with the semiconductors, let's take a look at a horizontal line on here. We can see that this is where we are in the semiconductors. It seems as though we still have potential to run probably up to that 2008 high, which this intraday high there in 2008 was 3403. So we're closing in on that, and that's not going to be the South Pole in this market is the North Pole. In other words, it's not going to repel each other automatically there. It has the potential that it could, but it doesn't necessarily mean that it will do that there. That's a potential level of resistance. You have to look at it only as potential. To try to fade this type of momentum really doesn't make too much sense. The financials kind of got out of their little short-term pullback here within this primary uptrend on the daily time frame. It held above prior resistance at that 16 level, and bounced nicely higher from there. And here we are at new highs for the year. As we know, we have we had exceeded the flash crash highs just at the beginning of the year, and the next level of potential for this market that people will have their eyes focused on is up near about $16.65 for the XLF. So again, just a strong market here. The IYR, I've seen people trying to short this, but it's really, we've got a rising 20 and 50-day moving average, and overall on the weekly time frame, we're still in a nice uptrend there. So you have to focus on, again, the good stock setups, MOLX, RAS. There's been a lot of big winners in here recently. This FTK has been a great winner. LNG has been one that we've traded, and it still looks great on the weekly chart. This is the type of chart that I thought maybe VTG could do something like this, but unless price action confirms that chart, then you just want to stay away from it. But Flowtech continues to behave well. You know what's interesting too is the solar group. I've pretty much missed most of this solar move. I was concentrated a week and a half ago on SOLR. That's been a real good trade. This is the one that's been, in my mind, is in the best uptrend. Now this week we've seen, you can list any one of them: SOL, SOLF, TSL, LDK. I think I just said TSL already. JASO. I missed a lot of these because they gapped up, they ran to that 50-day moving average, and moving averages are potential resistance. And most of the time, when you see a stock rally strong like this with a declining 50-day moving average, they will fail. So I haven't been chasing these stocks. Now, if you look at them intraday, they've been real nice, steady uptrends. SOLR in particular here. If you look at JASO, it's actually been a little bit more difficult in my mind to trade because we've had these gaps higher 3 days in a row. SOL, same thing. You basically have to kind of be in it. These are, where this market's been gapping up to, and to me, it's about managing risk always. I don't mind missing a move if I didn't see a low risk entry point into it. In other words, I don't want to reward what I view as negative behavior, which in my mind is chasing moves. I know that Todd Sullivan's all over the fundamentals in Jamba Juice, JMBA. Well, we've been watching that one as well because it's been kind of just building energy underneath this 200-day moving average. And I told subscribers last night that if it got to that we were going to look for officially to break $2.40, but we wanted to start watching it at 238 and 239. And if it started trading a lot of volume, it would be time to grab those offers and help break it out past the 240. Well, that's exactly what happened here. You can see that it traded quite a bit of volume actually at 238, and there was, if you were paying attention, an opportunity to grab a lot of shares in there. And a stock like Jamba Juice, it's got a good story, I realize, and it probably makes me feel a little bit more comfortable when someone like Todd Sullivan does fundamental research versus my own fundamental analysis. But this one looks like it should be able to continue probably up towards 275 or so, and then we'll see what happens. But more than being interested in the price objective, for me, my main concern is, can I get a bunch of this stock here at 238, 239, get out of some of it up at 245, 246, and then hold some and maintain a stop so that it eliminates the risk from the trade. That's my preferred way of trading a stock. I don't have the patience to sit with a stock for a long time, but everyone's got to do, of course, exactly what they need to do. And Rado Caesar asks me the same question all the time, which is, what was my best trade of the day? And I can tell you. I'll tell you what. I'll tell you my worst trade, Rado, and I think that's more instructive. I had some pretty good trades, but my worst trade of the day, this one I felt kind of rode me like a rented mule, which was this VHC. VHC, I like this stock a lot. The chart, that is. I think it's a lot like CEVA. CEVA had this huge run last year, pulled back to that 50-day moving average, and then rallied beyond 21 and a quarter or so. So I was looking at this VHC. It was a great trade last year, and I actually caught part of this break here on the short side. But it's broken some resistance in here recently. We can see it's back above these moving averages, and I think it has the potential to run up towards $18 a share. These type of big momentum names usually kind of come in, suck some shorts in, and then continue to rally. So what I was talking about on this stock was that we've seen recently that 465 to 470 has been the resistance. It's come up to that level and backed off 3 times aggressively. Very quickly it backed off that level is what I mean by aggressively. We've seen these higher lows though, and yesterday it was caught at the rising 5-day moving average. That is, we had seen the buyers step up in there. Well, today I got a little bit more excited about the stock than I should have, and started buying it right in here, and then I foolishly added below the declining volume weighted average price in here and held it all the way down, was ready to spit it out, and then finally I sold a big portion of it right here just before the stock turned around. So I took a loss in this stock, and that was my worst trade of the day, and I think that's, again, more instructive than my best trade of the day. But anyways, back to some of the other stocks that we want to keep an eye on here. I think that Dendrion's just kind of like a favorite of mine because I've done very well with it in the past. It's a biotech that gets a lot of shorts in there. I think there's about 12 million shares. In fact, I was analyzing this last night that between November 15th of last year, so right here, and the end of the year, the shorts added 3 million shares to their position. So you can see that the stock is kind of holding on that level where the shorts are in average involved in the stock over the last 3 months at least. So my point is from and I just lost my trend tool and I don't know how to get it back, so now I'm stuck without it. Let me see if I can do something else to get it. Okay, cool. But since this point, they've added 3 million shares at basically an average price of $37. Now, realistically, the stock has the bigger level of resistance that the stock could really potentially get up and go beyond is up here at about $39.50. If it can get up through there, then I think you're going to see a bigger move in Dendrion. But Dendrion gapped up a couple days ago, and kind of like the S&P 500, it gapped up, pulled back, got back above that volume weighted average price, and that's where it really took off. Now, yesterday I was kind of liking it because since that move, it was holding the volume weighted average price, and I thought above this level maybe you could get going higher. Well, it's not yet. But I think that you want to keep a close eye on Dendrion. If it can take, in particular, probably 38 out, then I think that one's got a very good chance of running up towards $39.50, maybe with a stop down near about $37 a share, $39.50, and then beyond that, if it could push through that, then I think you could be looking at the fourth quarter's highs near about $43.5, $44 a share. Hansen is another stock that gets a lot of short interest in it a lot of times, and it's kind of neutral here. You can see the bigger level for this stock to really break out is right up here at about $54.75. But the stock's holding above the rising 20 and 50-day moving average. It's trading in a tight range just in here recently, and perhaps above the high of the last 2 days, 53.70. Then you're going to see a push up towards the 54.75, and beyond that, then maybe we could see further continuation up towards the 2007 breakdown area, just under $60 a share. I guess, let's see, that's what was that? So I guess that was all that I really wanted to talk about, and I don't see any other questions beside Rado Caesar, and I don't know if that's how I pronounce the name. So I'm gonna cut it off here, and hope everyone has a good week of trading. Thanks.